Good day to everyone. This is Dr. Sivaraman of iknowindices.com. So we are in a fresh week. Hope you enjoyed the whole weekend. We will start the session, the slide presentation. Asian session live market analysis on March 8th between 5 and 5:30 GMT. So we'll be tracking the market using the live market code page. This is a simple tool which can be used effectively to understand how exactly the players intend to move the market. So let me focus the camera over that of the live market code page. Now Euro is in the level of 1.367779, the bid and the ask. The low is 1.3617, which was around that of the Friday close level, and the high is 1.3690. 53 pips net change positive is seen. In the case of GBP, 30 pips net change positive is seen. So from that of Friday close, it has gained about 30 pips. And in the case of USDN, 13 pips it has gained from that of Friday close. So all the three currencies, Euro, GBP as well as USDN, are showing net change positive. As a result, you find a contrarian move of USDN gaining along with that of Euro and GBP. Then the N cross, Euro N and GBP N, they have also gained around 50 to 60 pips positive. So you find that they are all gaining because of this contrarian move. And in the case of CHF, 43 pips negative net change is seen when Euro has shown a positive net change of 54 pips. We can understand that they wanted to drop USD CHF less when compared to that of Euro rise. Then in the case of Canadian dollar, they are holding near that of the low and slowly cutting the low and inducing all the long holders to liquidate, and the net change is 21 pips negative, and they are expected to gain again in this currency. A contrarian rise is expected in the case of USD CAD, similar to that of USD yen. So earlier they have been doing it in USD CAD. At that time, USD yen was holding around 88-89 area. Now USDN is gaining along with that of Euro and GBP, and USD CAD it is making a lower level swing, and they are expected to gain the levels till such time USD CHF, another denominator currency, is expected to swing around 1.06 to 1.07 area, and once the USD CAD catch up, then subsequently you will find USD CAD is going higher, then followed by that USD CHF is also expected to go up. Then in the case of Australian dollar, 0.9111 is the current level, 0.9064 is the low, 0.9115 is the high, net change is 36 pips positive. So you find that in the case of Euro, GBP and Australian dollar, and also in the case of CHF and Canadian dollar, USD weakening moves are seen excepting USD yen, wherein the USD gaining move is seen. This is referred as a contrarian move. This sort of contrarian move they are expected to do in order to handle the cross. So let us just go to that of today's expected market moves, the forecast. Then I'll explain as I promised in the blog about what had happened on Friday, so that people will be able to understand that market action is very important. Now, expected market move, Japanese session a spike up move that has already happened, and then swing near that of the high, which is what's happening here. Then European session, they are expected to swing near that of the high and subsequently make the rise. Then US session, they are expected to swing near that of the high and make some volatile moves and then gain the levels for today. And tomorrow they are expected to open lower and then further gain the level. So keep that in mind. So it is a weak beginning moves, and it may show some false moves of dips during the day. especially during the US session, and followed by that, uh, we are expected further rise in the case of Euro and GBP in this particular week. Excepting during that time, they could make some volatile moves in the market, and other than that, other days, my forecast is that there could be considerable gain in the case of GBP. Think Thursday, there could be some quick profit booking move, and followed by that there will be further rise on Friday. So keep this in mind, and accordingly you can make the trading decision. Now in the case of the initial lows set for today, 1.3617 is the low, 1.3689 was the high, and the new high 1.5124 and 1.5185 are the lows and the highs respectively, and they are not breached. In the case of CHF, the 89, the high is 1.48, which is intact. And in the case of yen, 90.31 and 90.66 are the levels, and they are not breached. And in the case of Australian dollar, 0.9064 is the low, 0.9114 is the high, 9115 is the high, and which is also intact. And Canadian dollar, 1.0264, which is intact. Currently the market is trading near that of the low, and the high is 1.0311, which is also intact, and probably they are expected to make some gains from without cutting the low. Let us see how exactly they are doing it. Now, let me explain with regard to what had happened on Friday. So, on Friday, you know that the non-farm payroll was expected, and I have given it in the blog that there will be considerable volatile move during that particular time, and finally they are expected to gain the level in the case of Euro and GBP. But they formed 1.36 as the high in the case of Euro on Friday. Then 1.3550 was the around that was the low, and after the data release, they made a quick upward stop and then followed by a quick downward stop, and as if the Euro and GBP are expected to fall very significantly. They made quick whips of move for one or two times around 13:13 to 13:30 to 13:45 GMT, and subsequently when traders found that okay, probably the non-farm payroll is giving the risk aversion move, then when they liquidated the longs and they gained the levels during that of the gap time. Then during the gap time, Euro went up to 1.3670 and GBP also went up during that time, and followed by that during the start of the year session, again they made a quick drop, and for about half an hour they have been holding near that of the low and making the quick up and down move. So this is how they make the price action and inducing the traders to take sell positions. Then afterwards from 15:30 onwards, they started gaining the levels, and many people thought that okay, this is a correction move during the downward correction or during the downward move trend, then why not we take the sell position? Then they gained the levels and they did not make a very significant rise of breaching about making about 150, 250 pips like that, but they have been holding it. And this morning during the Japanese session, they have gained the level. So those who have taken the short positions would have thought that okay, it's not a big deal. The short is making only 20-30 pips loss. So on Friday, on Monday, we should be able to book profit. But when they would have seen the highs are being held, then probably they will go in for another averaging sell, and then the players will show their true color. So there is no question of becoming bullish and bearish, developing a bullish sentiment or the bearish sentiment in the market. Why? Because when they make the quick drop, they are buyers, and that means they are bullish and buying it at the lower level, whereas they induce all others to become bearish. Then subsequently after the rise, they gained some more level today during the Japanese session, and they are making everybody to become bullish, buying at the higher level, but actually they are booking profit. So this is the type of mechanism they are following day in and day out. And you know that USD they used it as a significant instrument at that time in order to confuse the traders. So on Thursday, from 88, they raised it to 89 USD and 100 pip gain. So many of the people, even in the blog, they asked me, can I go short? Then subsequently, on Friday, they made straight another 100 pips gain, and afterwards they have not corrected it. So this is how you find the one-sided moves in the case of the denominator currencies, and especially USD yen. And same is seen in the case of USD CAD, that when Euro and GBP were dropping, so people thought that USD CAD could gain the levels, whereas they are not gained the levels, and they went up to 1.0315 and subsequently made the drop again. So they made a very flat move on Thursday and Friday in the case of USD CAD, indicating that they wanted to buy here and holding at the lowest level, and they want the traders to liquidate. But this is a useless currency to take position, so why not we liquidate? Then they will liquidate all their positions, then subsequently you will find USD CAD. So basically what you understand is the players test the patience of the traders. Then secondly, the players induce the traders to take wrong positions after the data release. So before the data release, they used to make a false move and subsequently make the intentional move after the data release. But predominant of the traders, after seeing the whipsaw moves during that of the data release, they wanted to take positions after the data release. But after the data release, they show invariably a wrong level. So they show the lowest level, okay, come on, you can sell here, or show the highest level, come on, you can buy here. That sort of trend they set after the data release. So the traders will become, or the traders find that there is no good trading opportunity after that. So invariably, many of the traders ask, do you offer the news trading strategy? So ultimately, it is not a very difficult strategy to trade during the data release. So basically, I explained it in a very simple way that before the data release, they will make a false move. So if they gain the levels before the data, that means they are going to drop at least 30-40 pips. And if they drop before the data, at least they will be gaining at least about 30 to 40 pips. Or sometimes if the going is good, they will make about 100 pips. So the false move before the data is a very clear indication then irrespective of the data, what is going to be the type of move their players are going to make. Then the second important thing is, and when we try to take a position during the data release time, then it is better to use the mental hedging order. In case if there is a drop of about 75 pips or 60 pips, then I will hedge it. Or in case if there is a rise of 60 to 70 pips, then I will hedge it. Because of the whipsaw moves, and even if you keep the hedging order about instead of 30 pips, if you keep about 50-60 pips also, the platforms get the greatest advantage of filling their hedging order or hitting the stops. So you have to take into consideration that the constraints what we face when we are doing the trading using some online trading platform. So I'm not trying to demarcate any of the trading platforms here, but 99% of the trading platforms, they give the slippage at that time, and you find that sometimes if suppose the high is 1.3689, the platform might fill the buy hedging order at 1.37, whereas if we keep a sell order at 1.3699, they would not have filled it. So that is the tendency you come across with regard to the trading platforms. They are all nothing but the limitations. We have to accept it. There is no other go. If you try to argue with the platform, then they will simply say that close that account and go elsewhere. And if they earned some considerably from you, they know that you are useless. Then they will not show all sorts of attractions what they have been showing to you before opening an account. So this is the normal tendency you come across with regard to the platform providers and that of their clients. So you have to understand this is reality. And there is no point in blaming anybody, but we have to trade smartly so that we don't get hurt. That's the best thing one can do it. And what you can do is you can keep a mental hedging order during such volatile moves, and you can straight away keep the order about, suppose in case you are buying at 1.3617, quickly market drops to 1.3550, keep a mental stop of 1.3540 or 30 and see how exactly it goes. And if they gain the levels, then raise the mental stop to that of the 1.3650 and see how exactly they are handling it. So you are not physically placing the order. If you place the order, probably they will hit the order and go. Instead, you are keeping it mentally. And below this level, if they go, then I'll try to hedge it. So in case if they come to 1.3640, don't immediately hedge it. Wait for at least 5 to 10 minutes and see whether they are breaching lower. Hedging at 1.3650 or hedging at 1.3640, it doesn't make much of a difference as long as you are hedging it. And only thing is, you will have the cooling time to see whether it is a false move or it is an intentional move or it is a whipsaw move. Then accordingly you can hedge it. In case if they drop it heavily, then you can hedge it by keeping a limit order below that of the market. They will fill it definitely. And subsequently, if they drop also, your usable margin is not eroded. So this is one important thing we have to understand. In that, I gave a remark there that if you want to do a position trade, suppose if you are taking a buy at 1.3617 and the market goes to 1.3640, euro goes to 1.3640, then you are trying to keep stop at entry at 1.3617. Then euro goes to 1.37, 1.38, and then you can trail the hedging order at 75 pips away from that other market. In case if they drop 75 pips, and the hedging order will 100% net profit. So that way you can use that trailing hedging order to maximize the profit, or you can use the trailing stop to just stop out and then re-enter again during the drop. So that way you can maximize the profit when they are making a move, and when they are dropping away from you, you have to necessarily use the hedging, and you can use the averaging of every 100 pips or 150 pips drop. You can do the averaging, but you have to also take into consideration, if you take 3-4 positions, then when the market goes further down, then all the positions are going to make the loss. So that's not position trade. Blindly allowing all the positions to maximize the loss is not position trade. You have to use at least, suppose I have taken one position at 1.3617, another position at 1.35, till the market goes down, I'll keep 2 hedging order and limit the risk and let them go to 1.34 and book profit in 1.3440 or 50 area in the 2 of the hedging position. Keep 2 hedging order below that. So don't at any time just blink at the market without taking any step. That is what I explained with regard to what we have to understand from that of the market action. And see, showing euro at 1.34 or 1.32 is not the main objective for the players. And they wanted to show some new levels, either at the lower level or at the higher level, so that the traders become panic or the traders become stunned. And ultimately in that process, they are able to earn substantially when the traders do distress trades. So that is the basic objective. That objective is not changed for them on a daily basis. So that you have to keep it in mind. And when everybody was talking about the risk aversion and the non-farm payroll is not good, so obviously risk aversion is going to come and things like that. And after the 2 days of weekend, they just gained the levels in the case of euro and GBP. And probably technically it may appear that there is a correction on before the further downward move. And that is how the players just induce all the analysts to spread it free of cost through the websites and through media. So ultimately we have to see whether it is achieved or not. And nobody is questioning such analysis. The analysis might be true or analysis can go wrong, doesn't matter. But ultimately, the traders need a total solution. That is more important. Okay, let me just to take a sell position at 1.3680 currently, thinking that euro will drop, and if it is not coming down, the only option provided to the other small trader is stop it out. So obviously you are forced to give the stop and you are not given a total trading solution. Thereby you are not in a position to come out of it. And if you cut the positions with loss at least 2-3 times, then you know that usable margin comes down drastically and you become further distressed. So this is what's happening in the market, and we need to understand, and you do need to come out of this particular situation. And that is what we understand from the other price action. So let me go to the other questions which are asked here. Let me minimize the PowerPoint presentation and take up the questions, and meanwhile focus the camera over the live market page. Okay, camera is correct. What are the false moves and the real trends we could see in this week? You know what is false move? False move is the one which is against that of the intentional move. We need to understand what the intentional move is. See, like Friday, they made a quick drop and within no time and they gained the level. So the drop was a false move. We are able to identify. So every day, they will be invariably making the false move during the cap time and also before the data release. And in between, sporadically, they will make stop runs during the start of the session and end of the session. So you have to withstand all the pressures what they are trying to give it. Then they will make the extended move. The extended move will be the gaining moves in this particular month, as I explained. And initially they will be gaining nominally so that the traders will accumulate more sell positions, and those who have got the very bearish sentiment will try to accumulate the sell positions during the rise, and later on they will start spike it up because they wanted to gain much more level and then offload whatever they accumulated around 1.36, 1.35, 1.34 level in the case of euro, or in the case of GBP from 1.48 to 1.50 level, how much they accumulated. They will gain at least 300 to 400 pips and then hold for a week and book profit with all their positions. And in that we will be talking differently. Okay, probably US economy has improved or UK economy has improved and European economy is not improved and things like that. In GG21, would you be able to quantify the gains in euro and GBP during this particular week in terms of pips? Okay, I have given already the potencies. So on a daily basis, they will be able to gain about 150 pips in the case of euro and 250 pips in the case of GBP. But there is a weekly limitation of 350 pips in the case of GBP and 600 pips in the case of euro. So once they gain, say, 150 pips today and 150 pips tomorrow, then the third day they can gain only 50 pips on Wednesday. Then afterwards they have to hover around there. So they don't do it that way. So instead, they make the gain and they drop and again book profit and accumulate again the buy positions at the lower level. When they drop, the recent buyers will liquidate their long positions, then subsequently make the rise. This sort of moves they continue to do it. And similarly in the case of GBP, 600 pips they can do it on a daily basis to 50. Then if they rise for 2 days, then the third day they can only rise about another 100 pips. So with which they will not be able to make any more rise in the case of GBP. So what they do is they make 1 or 2 days rise and then subsequently drop and induce the traders to go in for a long liquidation or for short selling and subsequently grab all the shorts and then subsequently make the rise and induce them to do the short covering. So don't think that any given time they will comfortably make either you do a buy and sell trade or do a sell and buy trade. They don't allow you to comfortably book profit. So you have to keep it in mind that the players create unnecessary stress to that of the traders. This part of the game. So we have to invariably understand that such situations you should be in a position to tackle. rather than becoming afraid of a new it. If Euro USD is closer to the high, USD CHF is trading. I don't know what he meant by that. Okay, if Euro USD is closer to the high, USD CHF is in the middle level. Can we use this to determine what players intend to do today, rest of the day? No, you have to see from time to time the market moves, and the net change in the case of Euro is 54 pips positive, net change in the case of CHF is 43 pips negative. So they do not want to drop CHF more, and when Euro is gaining more, that we are able to get that information. Then besides Euro CHF, that is the cross which is directly influenced because of the moves of the Euro and CHF. So current level is 1.4631, the low is 1.3630, and the high is 1.3631. So you can understand hardly about 4634. So hardly about 3-4 pips swing they are making it. The net change is almost 0-0. So in the case of Euro CHF, they may make a brief stop-in, but they may not make a significant drop. That is what we will be able to conclude when we look into that of the net changes of Euro and CHF. Beyond that, we will not be able to talk about the market, because to talk about the market, they have got different strategies and different mechanisms, and they are not under the purview of this particular webinar. What can we expect for the week on Euro GBP and how you trade it? I only give the trading advice with regard to Euro GBP, and I don't trade Euro GBP for the simple reason because in Euro and GBP separately, you will come across very good volatile move. If you use hedging, you will be able to effectively book profit on either way. So I don't have any currencies, any sentiments to any specific currencies. I don't think this particular currency gives good reward or the other currency gives you good reward and things like that. I focus only on Euro and GBP as far as my trading is concerned. As far as the trading advice is concerned to my clients, I give the advice where to enter in, where to exit, etc. And in the case of Euro GBP, the pip size is bigger and you have to keep it in mind. And so currently, Euro GBP is trading around 0.9022 and 0.8996 is the low, 0.9024 is the high. 22 pips net change positive is seen, and they are expected to gain another 10-20 pips in the case of Euro GBP. You can understand Euro, they have gained about 57 pips positive, whereas in the case of CHF, 26 pips positive. So you wanted to gain some more levels during this particular session in the case of Euro, and followed by that in the next session also, when they are making a brief dip, they will make less dip in the case of Euro and more dip in the case of GBP. Thereby Euro GBP will gain, and after making an upward stop around 90.24, they are expected to make the further slide. And slowly you will come across that they will come to that of 0.89 area, then 88 area, then 87 and 86, 85, 84 like that. But you should not think immediately next day or day after tomorrow they will come to 84. They have to swing at every level, and slowly they will come down with regard to the level, because they are offloading their positions in the case of Euro and GBP, which they have accumulated for a pretty long time. Then Arun, do you expect they may come close to that of GBP low? Okay, GBP has got a net change of 28 positive, and coming a little lower than that is not a big problem. But only thing is whether they are going to breach the low and go below your see. Whether they are going to make a false move up to that of the low and gain the level, or whether they, in order to create the bearish sentiment, they may cut the low. It depends upon the trader's position. They may cut the low and go even to that of the psychological level 51, and so that if the traders think that okay, sell and buy is good trade and sell, then they will gain it. And in case if a lot of traders have accumulated buy positions at the current level, then they may make even a drop of about 70 to 80 pips, then subsequently make the rise. So it all depends upon how the traders are committing position and the way in which they are holding Euro and GBP at the current level, making a nominal variations with regard to the net change. It shows that they accumulated short positions of the traders. So there could be an upward stopper before making a downward move. Then Eric, do you expect swing lower for Euro and GBP until US session? They are not swinging near the low. They are actually making the swings near the high now. And they may come during the session start little bit down to the middle level or in one or two currency pairs to that of the lower level. But I don't think that they are going to create a bearish sentiment again. Then what is the outlook of USD yen and the yen cross? As you see that they are making contrarian move with regard to USD yen. 2 days they gain the level and probably they may reach below that of the low briefly about 1921 or 1970, 1717 and then subsequently make the gain. And whenever Euro and GBP are dipping, they probably make the dip in the case of USDN. That may have an effect on the yen cross. But downside is limited in the case of the yen cross. When they make contrarian move, understand that the downside will be always limited. Then Jimbo, would you expect JBB and Euro at much higher levels end of the week? This should mark the long awaited reversal. Yes. So as I explained that after the first week of March, you will come across the trend will be set and probably today you will come across a little bit of the false moves and then subsequently the trend will be set. Then by tomorrow we will be able to understand what is the trend they have set for this particular month. Then you will be able to understand how you yourself can read the trend reversal. Eric, what session do you expect USD CAD to start rising? USD CAD, they are slowly coming away because I told you that 1.0264, they are trying to make a false move and trying to gain the level, and slowly you find the net changes become lesser to 14 pips. And probably during the European session, they could breach that of the 1.0311 and go higher. Then Nate, is Euro Yen going to drop before it makes rise? Not much of a drop I am anticipating in the case of Euro Yen. Then Pico, I noticed that the live code page provided by Saxo Bank has the days beginning and ending as 22. Yeah, the official session gets over by 22. Market is 24 hours. No, it is a continuous move and the day is demarcated like this. 0030 to 2200. I have given the session timings. They are all the timings of all the three sessions. Afterwards, the gap time starts before the next day starts. So the code page will continue to show the variations with regard to the net change and also the high and the low and also the current market conditions. They are all tradable levels, but only thing is at 2130 to 2200 GMT, they try to take the last 30 minutes average and try to fix the new high and the new low. And then subsequently, the players make the next day move, trying to go near that of the high or trying to go near that of the low and try to make the spread between the high and the low. So you have to take into consideration the 24 hours market cycle for any of that analysis. Only the day ends around 22 GMT and for that it is an intraday call. If you want to estimate something with regard to intraday, it stops with 22. There is nothing to do with Switzerland time and things like that. Then Jimbo, do you expect Euro USD to rise faster than GBP today? No, Euro is expected to gain the levels during the European session and subsequently GBP is expected to overtake. Because they need to drop Euro GBP for that. DP. Uh, Give expected moves of USD CAD. It has not moved. Yeah, that is what I explained. USD CAD, they are making a lower level consolidation similar to that of USDN, how they are making consolidation and accumulating buy positions, inducing distress conditions to that of the traders. And about 1 month back or 2 months back, you would have noticed that USD CHF was holding around 1.02, 1.03 like that. And whenever it breaches 1.0250, people thought it's a great move, about 20-30 pips. That is how it was making. And now you find that it's freely oscillating. In a similar way, USD CAD also, they will slowly come out of this particular consolidation range. You have to wait until such time they accumulate buy positions. They are not going to just like that take it up. What is expected for GBP? Will it go below 1.51? No, I don't think that it will go below 1.51 today so easily, unless and otherwise there is huge buy positions accumulated at the higher level. See, those who have gone short on Friday probably thinking that it might go further high, then try to square up their shorts and turn long, then probably it can go to below 1.51. Again, the N crosses forecast that they are expected to gain today. The downside is limited. Okay. What is your recommended strategy for GBP? There is no specific recommended strategy for exclusive currencies, and the strategies remain the same. Only thing is with regard to the stops or the hedging order. In the case of crosses, we have to use 50 pips hedging order instead of 30 pips, which I normally recommend for that of the majors, because the crosses are expected to make bigger moves because of less liquid conditions. Then BP. Do you expect 1.40 in Euro and 1.55 in GBP in this particular week? So why not we take up this tomorrow? Then Sridhar, can you please explain how to read the operator intentions observing bid ask during open of the session? Okay. Now, as far as the bid and the ask positions are concerned, you see that now red and green colors appear alternatively. Now, whenever you come across continuous red, then inducing to hit all the trailing stops or the hedging order or whatever it is. They will continuously put red and hit all. Then quickly you will find about 20 pips above a buy green order. That means they are trying to hit the stops and coming up. And also they signal it. Before doing such thing, suddenly you will find that 1.3691 in the case of bid, when the ask is 1.3673, and within about 1 or 2 minutes, you will find suddenly Euro dropping another 20-30 pips. They check whether on the upside there are stops. If there are no stops and only the limits, then they understand, okay, the traders are keeping the limits and trying to book profit. So instead of giving them the profit, they will hit the stops. So that is what they do it. Okay, gold this week. Gold is expected to gain levels in this particular week. It may reach about 1,155 to 1,167 area in New Age. For GBP USD, the rise drop is in block of how many pips? 25 to 30 pips. So there is nothing like that 25 to 30 pips and things like that. And normally they make the quick drops or quick rise and they try to target the psychological level. Every 25 pips is a psychological level. So in the case of Euro, 1.36 is psychological level, 1.3625, 1.3650 like that. So they know very well that predominant of the traders, when they take a sell position, suppose they are taken a sell at 1.36, then they will try to take a uh, stop or a hedging order above that of 1.3625, and then sometimes they will keep above that of 1.3650. So they go up to 1.3655 and then drop, so that they will make a definite fill with regard to the stops. Then Sridhar, do you have to observe the chart for get an idea of accumulated position? I explained in many of the occasions it does not say how much of positions the players are holding, how much of positions the traders are holding. Unless and otherwise they are segregated, it is no use. Then for AUD USD, do you see it leading the rise? Do you see it cutting the high for today? Yeah, I am expecting it to go above that of the high. How low will USD CAD go during the consolidation time? Okay, probably another 5-10 pips lower, not more than that. Then in the case of AUD, do you see more rise than low in this particular week? Yes. Okay. What is the direction of USD CHF for today? It will be consolidating here. USD CHF will make the swing between 1.08 to 1.06 area until such time USD CAD catches up. Okay, the questions are over. So let me focus the camera over that of the slide again. So the expected market, the spike already they have done it, and they are it is swing. That's what they are doing it. Then European session swing and rise. Then they will make a middle level swing and then gain the levels, and the US session swing and subsequently gain the levels. Tomorrow they will make one quick downward stopper and then make further rise in the case of Euro and GBP. These are expected moves of today and this particular week. And Thursday again they could make a quick drop downward move and then reverse again for Friday. These are all the expected moves for this particular week. So I take this opportunity to thank FX Street for allowing me to present this webinar, and also you for your kind presence here and listening to my talk. And if you are benefited in your trades using my strategies and analysis, I am happy about it. See you again tomorrow. Bye. Thank you, one and all.